Hey traders, John Howell here, and in today's video I'm going to be talking about Warren Buffett said this metric signaled the 2001 crash. Now it's sounding the alarm on the global markets once again. Also going to be talking about George Soros bashes President Trump, explains why he no longer participates in this market bubble. And also I'm going to be talking about, I am going to talk about the Fear and Greed Index and what that's saying, or what that's actually saying about the stock market. I'm also going to be covering some of the applying the frameworks to past bubbles to see where we're at right now and what we could be expecting for the rest of this year and leading into 2021. And then lastly, I'm going to be explaining more about what I've been saying about silver and gold, because so many people have been getting it wrong when it comes to silver and gold. And so I'm going to be talking about that as well too. So let's get straight into it. Don't place a trade based on what you'll see in this video, because there is no guarantees of making a profit in the market. It takes you a long time to become a good trader. So this video here is just to educate you to become a much better trader. All right, traders, let's get straight into it. So Warren Buffett said this metric signaled the 2001 crash. Now it's sounding an alarm again. And what's that signal? This is called the Warren Buffett indicator. Warren Buffett once wrote that investors, let's actually do this here. Warren Buffett wrote that once investors have seen, that investors would have seen the .com crash coming a mile away. Now this is interesting, guys. A crash takes time to happen, right? A peak takes time to happen. And 2008 crash took time as well too. So investors would have seen this coming a mile away. See, a lot of people, when they're thinking about the stock market and they're thinking about trading, they think crash, they think one day, right? You think, oh, tomorrow it's going to crash, that's it, it's all over. It doesn't work like that. Did you notice that the 2007 was nothing on the stock market? Absolutely nothing in the stock market. Meaning went sideways, formed the top, and then 2008 was what? All of 2008 was down, slowly down, then a pullback, slowly down, then a pullback. So please have a realistic expectation. If the market is going to crash, and we're going to see some severe selling. Now, yes, we're going to see big down days, but an overall massive crash takes time. Even the whole virus situation, right? That took over a month for that to happen. So just be patient, okay, guys? These things take time. Would have said a mile away. Had they paid attention to what describes the Fortune article of 2001 as probably the best single measure of the valuation stand at the moment. Knowing in the investing circle as the Buffett indicator. Okay, so simply what you do is you take the total market cap of all relative stocks to the GDP. When it gets above 70 to 80 range, it's a throw cash at the market. When it gets above 100, then it's take risk off. And you can see that if I bring up this level through here, you can see, I'm not sure if this is actually recent or not. When was this one? This was actually done, oh yeah, it's recent, it's August. So we're getting up there right now. Now, I personally don't believe, let me actually bring this over here for a minute so you can see a bit more. I personally don't believe that we are at the top of the market just yet. I believe we have a bit more upside to go, okay? Yes, we are in a bubble. Yes, I do see a pullback, but I think we've got a bit more upside to go when it comes to the stock market itself. And I'm going to explain the reasons why. Now, the first reason why I see this is that we're not actually at extreme fear yet. What we need to see is this indicator here to get to, extreme greed. We need to see this indicator get to the extreme greed. Now, we're approaching the overall top over the next few months, I believe, but we're not there yet. And if I scroll down the bottom here, and if I look at my indicator, let me actually blow this up through to there. And if I bring this up, you notice that one, look at this here. Notice how this fear and greed indicator, this down the bottom here was a good buying opportunity in the markets. Most people are fearful, that's when you're greedy. Most people are greedy, that's when you should be fearful. So that's how the markets work. And I knew just by applying what I saw in gold and silver, that's what started me alarming the sound that in bubbles, you don't know when the top is going to be, but as I was saying for silver and gold, that I knew it was going to happen soon. So right now, I don't believe we're not above this 80 level yet. I truly believe when in the mix we're getting in right now, I believe we're probably likely to see above an 80 result. I'm not sure whether that's going to happen this week or this month, but I believe once we start to see that and we get above into this 90 territory, that's when we're at the extreme levels. Now we're at an extreme level high already. And we have seen the last couple of times we got here, we got dumped and dumped. So we may be at the top right now. I don't know. I doubt that. I think we have at least a brand new high to come on the S&P. And I'll share the charts with you in just a minute. But we're not there yet. And I believe in the situation we're at right now where the government is just continuing to print money and they're going to keep printing more money, I believe that's going to continue to push the market up even more. Until something happens over the next few years where the government has to start to tighten and all that sort of stuff, it's going to be really, really deadly. But for now, this movement up, yes, everything gets oversold and yes, we've been in a bubble, but guess what, guys? The bubble can continue on. And that's the hard thing about these bubbles here. So one of the things that I do say is the reason why I believe we're getting towards the top of an overall top in the markets. Now the overall top takes time, okay? We may go up for another few weeks, but the overall top in the stock market is one of the reasons why this is we can see that, let's actually bring this up through to here. So notice this number right here. Number 5. What is this number 5? Number 5 is have new participants entered the market. Now, have new participants entered the markets. Have you heard of Robinhood? Right? So this is just one sign. I was talking to one of my private clients this morning, and he was also saying about, people he knows actually trade the stock market and making a lot of money. Mark Cuban's, I think his niece came out and said they're making 30% and all this sort of stuff. And not only that, but then I had my gardener who was with me just a few days ago, and he actually came out and said, I'm thinking about investing into the stock market. What do you think? And I told him, don't. You'll lose your money. Keep your money. Especially right now what's happening in the economy and what's likely to happen in 2021. This is a slow grinding halt. And I said to him that the more cash you have right now, the better it's going to be. Because if next year, if things start to really tighten up, you're going to lose a lot of business for your gardening business. Just don't invest in the stock market because it's not going to be good. And plus he didn't know what he was doing as well too. So if you know what you're doing, then, then just like me and my private clients, we do well. Now, when I say we do well, guys, we do have periods where we have losing periods. We may see our equity curve go up a little bit, then we may see it go down a bit and then not do much. We might have a bit of win-loss ratio, not really do much. And then something starts to spike again. You know what I mean? Like, that's what I'm talking about, like do well overall. But overall, your equity curve should look something like this. It looks something like that, right? You have really, really good winning periods, and then you might go through a bit of a dud period, and you might have not much going on, and so on and so forth. So that's overall. So if we have a look at the actual charts itself, let me actually bring up the charts right now. And if I let me bring this over here. So if I bring this up through to here, then I can see that on the S&P 500, on the S&P 500, we can see we're at almost at all-time new highs. This thing is going to push up to all-time new highs, and we're probably going to go for a bit of a run as well too. Just like gold did above 2,000. Now, why did gold flush above the all-time new high, and why do I think the exact same thing is going to happen to the S&P? Well, quite simple. There's when a brand new high or a brand new low, there's stops there. And so the market, if there's a lot of stops there, so if people are short this market, the market loves to run the stops. So if I look at gold for a minute here, and if I blow my chart up, let me go back to the weekly chart here for a minute, and let me actually bring up the all-time new high. Now notice look what happened here. This was the all-time new high, right? So the all-time new high was somewhere around about that level through there. So you can see, obviously a big move up. Yeah, look at this here, guys. I'll talk about that in just a minute. But you can see, look what happened. We actually had a big move up. Let me go back to the daily chart now and open this up. Notice how we got above high and we flushed. Why? Because there was probably a lot of stops up the top here. A lot of stops. And now we've just come back down to where that level is right now. So again, I'm going to get into silver and gold in just a minute, but I'm explaining the actual stock market itself. Let me actually bring this over here. And why I believe we're likely to see a bit of a flush to the upside because there's probably a lot of stops through there. Now moving on through to the Nasdaq, and the Nasdaq continues to move to the upside, been stepping in this channel all the way up. So we're not likely to see any severe movement down until we start to break below this channel, because it's a severe and strong like bull channel. And again, guys, a bubble is a bubble. Yes, I'm seeing the signs right now that we are in a bubble, and even George Soros was saying as well too, that he's no longer participating in this market bubble. you know, and stuff like that. And the thing is that once again, guys, we never know when this is going to end. So just follow along with the market, follow along with the charts. And that's the best thing you can do when it comes to your trading. And obviously have good risk management when it comes to your trading there. The thing is, guys, is that once again, the problem that people have is that what they do is that they trade these markets and they're trying to pick the tops and trying to pick the bottoms. They're trying to pick the top right now in the Nasdaq and hopefully for a crash. Don't do that. Right? Because this thing could just be going for a big vertical move up again. We never know and we don't know. Yes, I believe we're very high. Okay, if you look at, say, this weekly chart, yes, we're very high. And you can see that we're actually further away from this 52 moving average than we have in the past forever. And so that's obviously creating what I call an overstressed market. This is actually a very simple analysis I used on gold as well too, guys. You would know that I said based on gold, and this is just the reason why I use this, based on gold, one, you can actually see the 52 moving average where it is right now, compared to where the market is. But if I bring up my daily charts, I was saying that gold was too far away from the 52. Interesting, isn't it? Look at this here. The 52 is almost caught up. And I've been saying for the last week or so that the market is too far away from the 52. We're overstretched and we need to come back to some equilibrium. And notice how we're actually very, very close to them sort of coming back together now. Equilibrium, and then, you know, we're probably likely to go do its thing as well too. So with the stock market, guys, I see that we're probably likely to see more upside to come. We're not really in that extreme greed yet, but I do see all-time new highs coming for the S&P. There's probably a lot of stops coming through there, and so on and so forth. Now, let me actually get into the silver and gold markets. Let's actually bring this up through here. What I've been saying with this, okay, when it comes to why I've been giving a warning out for the silver and gold market. And if I bring up, say, this is the gold market here. If I bring up why I've been warning, why I've been saying there's a warning with silver and gold is because new people that are looking to buy the market, it's the wrong time. That was the warning. It was not a warning to say, look, we're trying to sell here and we're looking to buy it back lower. No. If you're a long-term buy and hold person and you bought a long time ago, like last year, and you've been just holding this, well, you go through the swings. You don't try and sell it high and buy it low again and think you can time the market. No, that's not what that's not what I was saying. And I was definitely not saying short the market because no one knows that the market's going to continue. And the worst thing you can do is try to pick a top. So no, I was not saying short the markets. I was saying for new people that are looking into the markets, that's why I was saying no FOMO. Don't FOMO onto the markets. Now, if you bought, once again, if you're a long-term buy and hold person, well, this flush down shouldn't bother you at all because, you know, next year, by 2 years from now, gold is likely to be a lot higher and you don't really care about this little flush down. What I was saying is for people that are trading the gold and they're looking to get in and get out maybe for a few weeks or maybe for a few days trying to capitalize on a big move, I was telling them no FOMO. See, some people have this completely wrong with my videos and they think that I've been saying, oh, you know, everyone get out, we're going to form a top and we're going to have a big drop down. That's not the way. Long-term investing is completely different to trading, guys. So I hope that all mixes up through here. I've not once said if you're in this position, if you're in gold for a long term, then now's the time to get out because I think we're going to get dropped because you cannot do that within an investing strategy, with an investing position. An investing position is what? Firstly, you buy on a dip, you don't buy on the rip. And then secondly, you hold for many years to come because if that's what you believe, then that's what you should stick to. And every time we get flushes on the market, you don't get freaked out because you've been buying and holding for long term. Though once again, guys, the whole thing I was saying was that no, you don't get out of your market, you don't sell all your long term positions in them and try to buy back lower. Because I never know exactly when the bubble is going to end. And you trying to time the market like that, like, I don't know, this could be a bottom in gold again and before it goes up. I don't know. And for you guys that are short in the market, that's one of the riskiest things you can do. Even though there's a high probability of the market dropping down, the worst thing that you can do is try to short a big bull market. Because who knows, this thing could have just maybe dropped down to 1950 and or it could have just been sideways for a month or two, allow the 52 to catch up, like I was telling you before, just like it did over here, right? Just like it did there. Let me delete that off the screen. just like it did there. Went sideways for a bit and then the 52 catch up and the way it goes. So please guys, one, the whole thing was stopping people from buying high. That's why I said no FOMO. Don't be buying high. And secondly, don't be short in a bull market. Are you guys nuts? The whole thing about this, guys, is probability. And I was telling guys, if you're not in silver and gold yet, wait for a good pullback if you want to, then buy the dip. Don't be buying the rip. And so anyway, guys, I hope this all clears it up. People are saying a whole bunch of things there. And that's the reason why, guys, if you know, I'm still holding my silver right now. I'm still long-term bullish silver. Why? Because I bought silver back last year, back here somewhere. So I bought silver, or actually bought call options on silver, and I'm still holding to this day. Even though I said we're probably likely to get a bit of a flush down, and we're probably likely to get a bit more of a flush down. But this is a long-term trade. In a bull market, guys, if you're long-term buy and hold, firstly, when long-term buy and hold means you don't buy high. Secondly, is that I'm in here, and the market's up here, but I believe for the next 2 years, even if we do see this over the next 2 or 3 months, we're likely to see this over the next 3 or 4 years, an all-time new high in silver. I may be wrong, I may be right, but that's what I'm saying through there. So I hope this all clears it up, guys. You've got to have, everything's about probabilities, okay? So once again, if you are short in the market, if you're trying to short a big bull market, you are just crazy. Don't be trying to short that, because now you think you're going to pick the top, and that's the worst thing to do. There's no probability in that. Trying to buy it after the market has ripped up, there's no probability in that. Now waiting for a bull market, then waiting for a big pullback and buying on that, there's a probability. So what I'm saying, guys, it's all about probability. And if you've been holding gold for a couple of years or more, and you're seeing this pullback, well, you wouldn't sell. No, you'd just be going with the flow. This is an ebbs and flows of how the bull market works. What I've been saying is just a short-term pullback in silver and gold before we likely to see this continued bull market. There may be a lot more downside to come, but I see a lot higher prices over the next couple of years. Hey traders, John Howell here. Thanks for watching my video. For a limited time only, I am giving away free access to my brand new trading course. I've put all my most powerful systems, strategies, and trading techniques that I've learned over the last 15 years and put it in this course, and I'm giving it away for free for a limited time. See, in this brand new Guide to the Markets by the Bulls trading course, and you can get it when you go to johnsfreegift.com, you're going to learn, firstly, you're going to get access to a brand new training course for 90 minutes, and you're going to learn all the details step by step to my #1 trading system with over a 90% success rate that works on any market and any time frame. You're also going to learn 3 powerful chart reading and trading techniques. You're also going to learn 2 more powerful trading systems, and also you're going to learn 7-figure trading secrets, mindset techniques, and so much more. There's top 13 mistakes you're going to learn, the 10K per month formula, and so much more. No, this is not a get-rich-quick scheme, but if you are struggling with your trading right now and you need help, then for a limited time, you can get free access to this. So go to johnsfreegift.com right now, or click on the very first thing in the description, because for a limited time, I'm giving away. So go to johnsfreegift.com right now and start getting access to this full complete trading course, plus also the free training with my #1 trading system with over 90% success rate. Go to that right now, and I'll see you on the next page.